Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, and although this could be an equation for opportunity, it's also an equation for risk. So be careful, only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good afternoon and welcome to Traders Workshop for today, Tuesday, January 23rd. I'll be your host as usual, Tom Schneider, CMT with NinjaTrader. And on Traders Workshop, we like to bring in our NinjaTrader ecosystem guests, our specialists, our experts, to help you understand the markets just a little bit better. Hopefully you get some value out of this presentation. We did our due diligence. We got a great guest this week, recommended to us by another Traders Workshop guest, but talking about something slightly different. And I don't know why I'm delaying this. It's my pleasure to introduce the founder and CEO of MasterTheMarkets, Tiro Nagapan. Tiro, welcome to the show. How are you doing today?
Very good, Tom. Very good. Yeah, very, very happy to be on here and serving the NinjaTrader ecosystem traders today.
Well, we're eager to have you on and learn more about your specialty, your look at the markets. I was just saying I like your tagline that I was seeing in the emails, spreading the truth about the markets.
Yeah.
But it is great, when Gavin was actually saying you got to meet Tiro, and we did, and finally got you on. And so I'm really eager to hear what you have to say. But just, if people want to just invite people to the chat, because they might have something to say to you as well, Tiro. So I want to invite people to the chat. That's at ninjatrader.com/events. And you can click the play button. You can enter a handle and ask questions. You'll also be able to see a link that Tiro's going to post for us that we'll put in the chat. But Tiro, just so people can get to know you a little better, kind of what is your background? Where did you start off in your professional development, and how did you get to where you are today?
Yeah, so it's quite a bit of a story whenever I usually say this. I'll keep it short as possible. So I was born in Singapore. I did my military service. I came to the UK to do my degree. So I did it in Scotland, Glasgow University. Not sure how many of you know about it, but just to give you a rough overview about Glasgow in Scotland is you get to see the sun about 10 days in a year. So wherever you are, be happy that you're seeing the sun. Getting more of that in 10 days in a year, and it rains quite a lot. It's very cold as well. But regardless of all of that, I had an awesome time in Glasgow University. I did my pharmacology degree over there, 4 years. And then after that, I came to London to do my PhD in cardiovascular pharmacology. And for those people who are saying in London, like Tom, some people in London say, oh, London's weather is not good. I'm like, dude, you haven't been in Scotland. Right. So yeah, that's what happened in London. I was doing that, and then turn of events, my PhD wasn't really going very well. So then I left that, and then I got into the space of finance because I was thinking, at some point in my PhD, I was loving my PhD, don't take me wrong. I loved cardiovascular and pharmacology and the research side and all of that. But I was thinking, we don't want to be working for someone for the rest of our lives. We want to make money work for you, want to be free. That's what everybody wants, freedom. And most of our clients will come to us say, I'm worked out. I want freedom. I want to spend more time with my family. So I started thinking like that as well at a young age. But just life pushed me to that cliff where I had to look into different things. And I got into finance and I got into trading. I worked on a private trading floor, and then I left that, and then we set up MasterTheMarkets. It's been going on for more than 14 years now, and here we are.
Wow, that's incredible. That's such a different background than we usually hear from our traders, but there are parallels or overlaps, as I'm sure you could explain to us. If you're doing research, it's analysis, it's data analysis.
Correct.
And I look at it, whether it's in the medical field or in the financial field, it's just different data sets you're working with. but that other piece of it you mentioned, I think, is so key and so appealing, which is the ability to control your schedule, the ability to trade when you want, and maybe not, not because you have to trade at a certain time. You're not running off to an office and well, maybe you were right when you were doing the private trading, back then, but now it's a lot different. And so, really interesting path that you took to get here.
Yeah, I mean, you're definitely right, Tom. I think you nailed it. I mean, you nailed the points. I mean, so many times I'm very grateful that I'm really doing this because you have the freedom of time. So many times our clients come and tell us, as the body ages, right? You don't have the same kind of energy like you had about 20 years ago and everything. And sometimes you want a bit of relaxation, a break, but still, control your schedule and all of that. So that's why, the trading game, it's really good, investment world and whatsoever. It does take time to learn the skill. It's not like a overnight skill that you learn, and most of your traders will know about it. But it's rewarding in the end because, you can tailor your own schedule and have your freedom, and spend more time with your loved ones.
And I think there's also the aspect of, um, when you have a good trade and when you don't have a good trade too, you have those direct responses, right? You have direct results that you were in control of. And sometimes you might not get that in a different type of field, a different type of job. You might do your job very well, but the end result might not be the one you favor. Here, same thing, but it's all on you, right? It's you pull the trigger, you push that button, you make the trade, and it's ultimately you're dependent on yourself, which can be scary, but I think ultimately when you get to be good or competent or whatever you want to call it, it can be very rewarding too. Whether you have a winning trade or a losing trade, it's all about you did the thing, you did the action that got you there.
Spot on. You're absolutely right. I mean, it's got its pros and cons because then you're taking all responsibility for everything that you're doing. But I think over time, I think as we say in trading, we follow a three component part system, which is one is the strategy construction itself, the strategy component. And that part itself, as Ray Dalio, I quote Ray Dalio saying this, and he says that finding out the edge of your strategy already takes you quite a few good years to really establish it. And how would I say the edge of a strategy? The question to ask yourself is keep asking yourself, whatever strategy you got, why must your strategy continue to work? It's a very important question and it takes many years to answer it. And I know some clients who haven't really thought about this well, they come and tell us, oh yeah, I know why the strategy must work. Yeah, because the market's got to move. And that's not an edge, right? That's definitely not an edge. So you got to really think deeper on that. Why must your strategy continue to work? That's the edge. That's the strategy component. Now, once you got the strategy component, then the second part, Tom, what you were saying is, you have to consistently execute the system. You can only consistently execute something past your losing trades and winning trades if you intellectually and emotionally believe in your edge. So we go back to the first part. So they're all interlinked, right? And that's where you can let go of the outcome and just keep putting the trigger in, keep executing. So that's the second part, right? So the emotional component, which leads to consistent execution, but the belief and intellectual belief and emotional belief coming from the edge, which is the first part. So the strategy component, then the psychology component for consistent execution, then the last part is your stats review, just to keep monitoring whether your strategy is working in real time, how it's performing, is it reaching its maximum drawdown, is it deteriorating, is it time to tweak anything? All that monitoring must be done. And the way we teach is, as some of you already figure out by now, is principles. Whatever we teach can be cross-applied to any instrument, any time frame, in any kind of strategy construction. The monitoring part, remember, even in business is the same as well, isn't it? You can't just build a business today and release one iPhone product and say, you know what? Let me sit back and let the money roll in for the next 100 years. It doesn't work like that, right? After a while, you start to see, people are moving on to different types of phones and gadgets, and then you got to tweak yours, you got to monitor your stats. So the same principles apply in anything that you do.
Well, sure, and there are different tools to analyze strategies. I've worked at several different companies that have those tools, and worked with traders who had ideas and had to refine those ideas. And I'd work with them on the initial part of building those ideas, but I'd also check in on them, right? A year later, a couple of years later, see how's it going, because you just, like you said, you don't want to just wind it up and let it go and just say, oh, well, right? You have to keep on reevaluating because things change. You know, there was a movie in the 80s with Don Amici called Things Change, and that was a very simple movie. It was very good, but he would just say things change, and that's true of the markets too. So what worked 2 years ago might not work now, and you have to see, like you said, the curiosity part. Why is that happening, and see if you can address that.
Spot on. Absolutely right. Yeah. The specifics will change. Principles keep recurring. So we focus on the principles and then keep track of the specifics through the stats.
So, maybe we can go to the charts.
Yeah.
And see what, something that you've been showing us. I want to learn more about it.
Right. Great. So I will start off with first the main challenge that traders usually face. So you see, I've got the mini futures right over here on the 60-minute chart. I believe everyone can see that very well at the moment. I'll go on to a lower time frame later, but I just want to establish in point over here what we have done. Now, first of all, this work goes back to the 1960s. So from the quant traders, right? That's where my mentor's mentor actually started this work that I'm going to share with you right now. And I shared also in other talks on STA, Society of Technical Analysis. And along with Gavin as well, we work a lot with Trade Guider, with volume-based analysis too, volume spread analysis. And you guys will start to see at the end of this presentation why they work so well and how these quants actually, they're incredible minds. I would say I've looked at a lot of things, but this work that they produce is actually quite mind-blowing. It's quite simple, but very mind-blowing, and how far you can go into any kind of strategy construction and strategy boosting any strategy performance. So let me carry on with this. So in the 1960s, they started this framework. And why did they do that? I'll start off with the main challenge that all traders face, right? And which I used to face as well, which is, if you take a look at this chart, what we got is what you can see, the orange arrow here and the blue arrow here, that's just a top that has been quantified and a bottom that has been quantified. That's all we've done here with what we have with the smart money framework, and we designed an indicator on it. Now, let me carry on. So if I convert that into a line diagram, just connecting these arrows, the orange to the blue, blue to the orange, and further down like that. So you got something like this, right? So now let's analyze this spot here, yeah? So what we got is a top that is confirmed here. So we got the top to bottom move occurring here. Now, the main challenge as traders, what we usually have, let's say, for example, you shorted this market. Let's say over here, where I'm drawing this line here. Let me just draw a blue line there. Maybe it'll be easier for you guys to see. So I got a blue line there. Let's say I shorted it at this point, right? So now if you shorted that, yes, so far in unrealized profit, up to this close, you are now in unrealized profit at the moment. Yeah, you've not banked in, you've not exited. So all that is clear. But the panic, what happens is, the biggest question in your mind, which will be the doubt will start to come in, is, hey, you know what? We got so much in profit, but this is coming against me at the moment, right? And the usual question that will happen in every trader's mind is this red bar at the end of this hour going to go further up and up towards my stop loss, right? That's the biggest panic. But on the other hand, some part of your mind say, oh no, you know what? Let's be patient. This can carry on further down and my unrealized profit can increase. And at some point, then I can come out. So the biggest question and the biggest challenge really is between those two scenarios at any point of time. Is this going to go against you? Or is this going to continue in your direction? Now, let me get even more specific. And this was the thinking of the quants, right? So let's observe how smart they were. So they put it down to two scenarios that can happen. And they really made it so specific. They say, at any one point of time, the main challenge of traders is in answering one of these two questions. is the trade going to go further in your direction? So is it going to continue in your direction? In this instance, because they quantified what the top and the bottom is, the market can only now be summarized into two types of movement, either a top to bottom or a bottom to top move. Now, if you're going short, you naturally are doing top to bottom, which is what's happening here. So the question then is, for the main challenge that traders will face is it going to continue in its direction right now, which is a top to bottom move, or is it going to turn and make a new turning point? Right? So it's just a question between these two scenarios. Which one is going to win? Is it going to continue and do this, which is what you want if you're doing short? That's beautiful. You'll be very happy. Or is it going to do number two? Is it going to turn around and make a new turning point? And in this case, you're going to start losing, you hit your stop loss, whatever it is. When it confirms its bottom, then it's a bottom to top move. We will get a blue dot here. And then we would think, you know what, what's the point of me being in that move anymore? Let's get out of it. So the main challenge is always figuring out whether it's going to continue or whether it's going to make a new turning point. And you need to stack your probabilities between these 2 points. This, I would say, is the first point. This is how they started their research, right? Between addressing these two biggest points, which is usually the challenge of traders. Wouldn't you agree so, Tom? I mean, wouldn't you think that is the main question that goes in our mind as we are taking a trade?
For sure, for sure. And you just described pretty much my approach versus Jim's approach. He's more patient, Hiro.
Right,
Like that much. But you're right. I mean, really, it's one of two possibilities. As my uncle would have said, everything's 50-50, it either happens or it doesn't. But that's not really what we're saying here. We're saying, well, there are two possibilities, but what are the probabilities it goes in your favor or against your favor? And that's what, as a trader, you have to recognize.
Correct. So that's the first step, what they did as quants. Now, of course, quants don't stop that, right? Quants are very good in quantifying stuff and giving you a mathematical statistical probability. And that's the thing that blew my mind when we met our mentor first. How can these guys, talk without wishy-washy? How can they nail it so to precision? And I'll show you in this presentation right now what they did. So this was the first part of the entire framework. So that's how they started. Then from them, they then figured out, okay, the solution to this, to find out which is a higher probability at any given time, even in this move over here at the moment, is first to, just like how to build a house, the first step you got to do is put the bricks, right? That's the first foundation. Just like that, they figured out that the first step to do that is quantify what a top and a bottom is. Okay, that's what we got here. We programmed all of that based on the formulas that they gave us, right? And then you can see over here, there'll be another blue dot over there, and the orange arrows will keep going. I need to just put it on more bars and going back. But that's the first step that they did, quantify what a top and a bottom is. And what does quantify mean? Quantify simply means that if I'm showing this chart to 1,000 people or 10,000 people or 100,000 people in a classroom, all of them will say the same answer, right? That is a top, that is a bottom, because everybody watching this will say, hey, you know what? That's the orange arrow. Yeah, that's a top. Everybody will agree based on what we have quantified. I'm not saying it's the Holy Grail, but based on what we have quantified and what the framework is showing. So that's the first step. So to quantify the tops and bottoms into solving this question, which is a higher probability, continue or make a new turning point. That's the first step. So we've done that according to the formulas. Now the second step, after that, because you do this, which is you lay the bricks for the house, the next step, that's where the interesting thing happens. They're able to derive 3 critical stats, and these are so powerful for any strategy that you would want to create. Now, what are those 3 stats? The first thing that you can derive once you've quantified your tops and bottoms is find out how much move is left. This is very important, right? This will help tell you whether it's going to continue or make a new turning point. How much move is left in quant terminology, in institutional terms, they call this open equity. Or in other words, you can call it open profit. Anytime I get a signal, how much open profit is there? How much open equity is there? You know, Jesse Livermore, I think, was very famous in that book on the stock market book, how he made millions in the stock market. That's the first question he always asks whenever he enters any trade. How much move is left? But it seems like a very critical question, even in any investment that you do as well, isn't it, Tom, and everybody else watching here? Even if you were to buy property as well, I mean, or any investment, right? You want to ask yourself, hey, you know what? Am I buying it at a cheap price? Is there move left? Can I make a profit out of this? If you're buying it so near to the top, there's so little profit. Or worse still, if you buy it at the end of the move, there's no profit to be taken. Right? So that's the first thing. How much open profit or open equity is left? And you can find that out by, because it all started with this first question, by fixing 2 points. One, you need a point of entry. Okay. And then you need the maximum point reached. Right? The point of entry got to be made consistent, and the maximum point reach got to be made consistent. And how this guy's made it consistent is very smart, is going back to the first point, because they quantified what a top and bottom is. Right? So now let's observe that a bit more closer. Let me just bring up maybe a higher time frame. Let's see if that is going to be good.
So Tira, I just want to real quickly, I want to kind of some thoughts while you're explaining this. Points of entry seem like, okay, that seems definable, right? We can define that pretty, I won't say easily. It's going to be however we decide we get into a trade.
Okay, yeah.
Or looking for an opportunity. I like this type of trade using these kind of indicators, whatever it is. What really to me is interesting is finding that maximum point, because that's not something we know when we get in. Well, I should say we don't know where the market is going to go when we get in a trade. If we did, there's something wrong with the market, or we have a crystal ball or something.
Exactly.
It's not normal.
Yep.
But based on analysis, based on
probabilities,
history, right? It's the probabilities. That's where the quants come in, and that's where they say we can actually target a maximum price based on our research, based on the history. And I'm not a quant, so I don't have the tools. I don't know the tools that they would do to find that, but I know that they do. That to me is the fascinating part of this.
Yeah, and that's what I want to develop a bit further. Remember, the question is how much move is left upon point of entry. You're absolutely right, Tom. You know, point of entry, and anybody will say, yeah, I know what, I want to enter here randomly, I want to enter here. Anybody can get there. But the problem is, if you don't have your point of entry on a consistent basis, based on some rationale or some framework, you cannot answer this question of how much move is left. On a probability basis, I'm talking about. Randomly, yeah, anyone can talk, right? But on a probability basis, where both these points are locked, they found out that the way to answer this question is by first looking at swing moves, right? And they knew that markets never move in a straight line. Whether you're trading or not trading, you will all agree with that. Nothing moves in a straight line, including life as well, isn't it? Nobody's life is all the way rosy, even the biggest billionaire and celebrities and all that, right? Nobody's life is moving in a straight line. So that's a principal thing as well. So the second thing that it moves to is the markets. How do they move? They move in cycles, just like our life as well, isn't it? Ups and downs, right? Now, if they move in cycles, they figured out that it will definitely create turning points. And the turning points are usually bottoms and tops, right? So then to answer this question on how much move is left, they said, if I quantify what a bottom is, here's the smart part, right? What they did. Then what they said is, but when is that bottom confirmed? So they created formulas, right? And they tested different formulas. They ran different computer systems on it. So that's what we got here. So you can see the blue dot here happening in an orange dot. So a blue dot is what we call the confirmation bar. And what is it confirming? It's confirming when a bottom is formed. It's saying that according to our formulas now, that bar has confirmed the bottom. Over here, the latest one that is confirmed, if you look at this one here, the latest one on the right-hand side, on the mini S&P futures, it just confirmed its bottom here on this one. Now, they're saying, according to the formulas, this bar fulfilled the formulas, it confirmed this bottom. So the blue dot and the arrow happens at the same time. This will help answer this question. Remember, I started out this question, whether it's going to continue or whether it's going to make a new turning point. At this point, it's made a new turning point as where the blue dot is. It's confirmed this bottom. And the point of entry where they would locked it in on a consistent basis is on the close of the confirmation bar. So here where I'm drawing the line there, right? So that's how they lock in the point of entry based on a swing entry or based on a bottom confirmation, okay? The next point is, where is the maximum point? Just like you're asking, sometimes some people may struggle with that, but even this first point, you've got to go deeper into it. You've got to lock it in the same way. That's when I show you the stats, it will start to make sense. Also, be very random. Then the second point, maximum point, again, you go back to your tops and bottoms. The maximum point is, if let's say I entered here on the close, where the confirmation bar came in, the maximum point is the top in a bottom to top move. So it's the high of this bar, right? And then now I'll be able to measure how much move it has done. Let's say in this case, let's just do a simple one here. In this case, 4,600 all the way to about 4,850. So that's about 250 points is done in that swing from the point of entry to the maximum point reached. Now, some of you who have been quite experienced, the first thing I always get is, oh, Thiru, but that is historical. You're looking back in historical and saying that. But before we say that, the first thing we got to ask ourselves is, okay, appreciate that they've locked in a point of entry, a maximum point reached, to find out how much move it has done. The second thing then to tackle is, okay, but it's historical. Then the next question is, if it's historical, then the natural question is, why must it reproduce? Because only if we can reproduce, Tom and everybody else listening in, it's the only way for us to keep making money, right, out of it, because then there's an edge. So then how do you increase your probability of it reproducing? One is by increasing your data sample, right? Because something that keeps repeating itself must continue to repeat in the future as well. That's one way of thinking. But even then, one part of your mind might battle against that, maybe not, I'm not sure. I've seen, a lot of systems and all of that doesn't reproduce. Then the second thing is, in real time, when you put some proof of concept account on it, monitor the results and see. But this whole logic will make sense because whenever a bottom is confirmed, if you're telling me that it cannot move any further up, that means either you're getting the bottom wrong or the instrument is not liquid. It doesn't move. But with the mini S&P futures, so many people are trading it. How can it not move? So by logic, even it will start to make sense, but still your mind needs to be convinced and you need to see it when you start to trade it on paper, on real money, you will start to see it because this concept will work. And that's why we totally believe and are convinced. And that's why we show all our results transparently over the last 10 years, all including drawdowns, everything we show. The final part, before I pause for a minute, is so we've talked about so much about how much move is left. And I've told you how to lock in the point of entry, the closer the confirmation bar to the maximum point reached. So like that, we can accumulate all our data over the last 10 years and analyze all the swings. So on NinjaTrader, what we have done, great for NinjaTrader users and future traders over here, you can get this and you can go under the indicator section and I'll show you a very short snip because we don't have really much time on this one here. But when you go into Smart Money Indicator Elite, we can find out three stats. I'll just cover the first stats for now. The open equity, right? Or open profit. Remember how much move is left. Once I've done that, I've just put it for a small data sample just to give you guys a flavor for 1 year, right? For last year, 2023. And then you can put all the first column value and all that. So once I've clicked on all of that and tell it where to save it to and everything, what file, I can click on OK, apply and everything. So I've done it before, so it's a safe time. So I'll just bring it up here. So you can see open equity over here. I'll just hide this one for now. So you can see that it's analyzing 20 trades for now. Let me just see if I can keep that one at the back. Maybe I can delete this one because you can reference this later. Great. Okay, cool. So there we are. So it's analyzing 20 swings, right? So, and it's telling me that 1,000 points. So for here, we've said 0.01, right? 1 basis point is 1 point. So 1,000 points means 10.00, yeah? So that everybody gets the same unit of measurement here. So this means 10 points here. So to move 10 points, remember from the point of entry, confirmation bar, whether it's a bottom or a top, 95% of them will get there, right? Or in other words, 19 out of 20. And here's the breakdown here, right? So the OE point, if you look at the column, it tells you every date where the bottom or top got confirmed, right? 9th of March. This moved 110 points from its confirmation, whether it's a bottom or a top. This moved 209. This moved 80. 17.15. This moved, you see, this is the one that moved nothing. Immediately turned, there was a noise, right? This one, 54.16, 41, and so on, so forth. So it's collecting all of this data, then putting it into this open equity tables. So by looking at this, then my mentor then told me, he said, then what you then do is that you look at all this. So you can see that the 50%, you look at mainly 3 points, he said, in this table. Look at the 80% number. 80% of them get to 30 points. Then you look at the 50% number, which sits between 8,000 and 9,000. Let's just say 8,500, so 85 points. And then you look at the last one, the 20%, 180 points. So now, traders, we have effectively answered the first question on a probability basis on how much move is left every time you enter a trade or on a signal of a confirmation bar, either for a bottom or a top. We have now covered how much move is left on a probability basis. And the main ones you're looking for is really 80%, 50%, and 20%. Now, based on these 3 probabilities, we then construct 3 different strategies. One very high reliable, one medium, and then one low reliability. Now, how do you increase this? Because if I just create a strategy which means only 20% of the time is fighting a lot against its losses, so how do I increase it? I do selection. I don't trade because of the framework, the solid framework that they created. These guys are just geniuses. I'm saying it again, but how they created the framework. Now you don't trade every dot because, as you and I know, Tom, not every guy is going to be a Hussein Bolt or a Mo Farah, right? Who keeps running and running, right? Doesn't have stamina, right? So you select the dots. And how do you select the dots? And that's where you can start to use all the tools and your knowledge that you learn from. You can combine your stochastic on it, RSI on it, weekly time frame correlations. Oh yeah, the weekly is up as well, monthly is up as well. Okay, this one, it could be one of those 20% runners. Let me select that. Let's go for it.
So Tiro, that's really interesting, and I love the usage of these statistics to kind of paint a picture of where the market could go. This also reminds me of how on an intraday basis, you might layer into a trade, right? So let's forget layering in. Let's talk about layering out. You might have a 3-unit trade on, and this could be a guideline for taking the first unit off, taking the second unit off, and then leaving that last one to see if you get that runner, of course, with stops trailing if you choose. But that's fascinating. And I think when you're looking at the point of entry and then you're looking for that target price and you've identified it, the instinct is to say, well, if we're identifying the top after it happens, we're obviously not getting out exactly there. But what you're not doing that here, and I'm going back to the original, when you were drawing that originally, that's not what you're doing. You're trying to say, look, we've quantified the moves to the top because that's where they actually went. And so whether it's confirmed 2 days later, 3 days later, 4 days later, immaterial, because you're getting the statistics on how many or what percentage of the top 20% versus 50 versus 80, how far they can go. And then you can use that to your advantage, not necessarily waiting for that confirmation of the top, because you know that, okay, 80% of the trades are going to get this much.
Correct.
From a historical basis. Of course, I'm going to slip in there, past performance not indicative of future results. Anything can happen, right? But according to the statistics, this is what has happened in the past. So if we believe that 20 years of data or however 60 years of data is repeating, and there's no reason not to believe that because we're all human, we have the same wants, desires, reactions, all that great stuff. This is what's expected to happen. Might not happen this trade, but overall, over the course of time, this is what happens 50, 80, 20% of the time. You can use that in your trading strategy without necessarily having to wait for that confirmation.
Spot on. I think you nailed all the points that we were just mentioning it. You can even see even recently, look at that, right? So from the confirmation bar, point of entry, 80% of the time, as I said, if you go back to here, it's done that already, hasn't it not? It will do 80% of the time, it will do is 30 points, right? So if you go back to here, it's done more than 4850, 4880. Yeah, it's done that, hasn't it? If you look at that. Yeah, 4898. So you would have got your 80% number, right? You see,
And this is what I imagine they're doing in the hedge funds and the institutions. They have entire teams doing exactly this and monitoring this in a real-time basis, right?
correct. Spot on. You know, another way I paint it is, Tom, you know, if you look at a race, right? If you got point A and point B, let's say it's a 25-kilometer run. Yeah. Actually, a marathon is much more bigger than that, but let's skip to 25 kilometers. Right? Let's not scare the hell out of all of us.
Right, right.
Right. So if let's say if you had 1,000 runners starting here at point A, I've done what have I done? I've only done very small 5-kilometer runs,
Yep.
but you know, let's say you had 1,000 runners starting from the beginning point A, but the 1 kilometer mark, right? Whether you are the most unhealthiest person or whether you're obese, unfit, healthy, the best elite runner, most of them will get to the 1 kilometer mark. Right. I mean, 950 of them, let's say, will get there, maybe 50 drops off for some reason, right? This is what we mean by the first one, the 80% number. What is the distance that 80% of your runners will get to? Every time I see a dot, that is one runner for me, right? The only difference in between the market run and real-time run is that this is vertical and this is horizontal.
Yeah.
Right? So, but then when you come to the midpoint, let's say 12 kilometers, right? We naturally expect more drop-offs, right? Probably only about 600 guys get there, 40% drop-off. And the same thing here. This, you know, by analyzing and understanding things in this way, based on the first statistics of how much move is left for open profit, when you understand it in this way, let's say by luck, a trader catches this big move and he gets excited and he starts to think every trade I'm going to take is going to become like that, right? But by understanding a principle like this, you start to say, hey, hang on a minute. Let me pull back a bit. This only happens only 20% of the time. So why should I go back into the market again and lose back the profits that I've got? This really helped me a lot because, you know, biggest problem that we all usually would have had in the beginning is we make all that money and then, but we will give it all away, right?
Right.
Because we think that, you know what, it's got to happen again and again and again. You know, I got this, you know, this is easy, right? One of my traders told me that as well. I said the first time when he got in, he used the scaling in strategy, right? So every time it goes up, you start to break even, build your positions. And he said the first one was so good. And he turned 1,000 pounds into 5,000 pounds. And then he went to go and tell the whole world about it. Hey, guys, you got to get into trading. It's so easy. But what he didn't understand is he caught that 20% runner, you know, that happens 20% of the time. But because you don't know the numbers and everything, you start to think it happens all the time. And then he lost back all the profits. So by even understanding it in this way, it helps you go a long way in building strong, solid strategies that will go a long way. And one more thing I'll say, you know, in selection of the dots, which will get to the 20% runner, the volume will help a lot. And this is one of the main reasons why we've partnered with Trade Guide and Trade Guide partner with us as well. And that's how we got to meet as well when we're talking here at Ninja Trader. The volume will help a lot in massively selecting those big runners. So the Trade Guide team really helps with that. That's why our indicators are so complementary. And me and Gavin have done so many webinars where it's just mind-blowing how the signals work so beautifully together.
Yeah, that's great. And volume can be a confirming indicator in this case. I know Gavin follows the Wyckoff method and you know there are ways you can use volume as a you know main indicator. But these indications, they can confirm or deny each other, right? You might say, I get this on my system, but on the Wyckoff method, it's saying, oh wait, no, do something different, or it doesn't jibe. And that might be a pause, right? That might say, oh, well, then maybe this is only a 20 or an 80% move,
Spot on.
right? Rather than
Spot
that
on.
20 runner. It can help temper your expectations
You nailed it. Yes. Another beautiful thing about this, Tom, is that it's how the nature of the markets move. You see, we can never say that it just moves in a straight line. Whatever time frame you put, it will move in cycles, isn't it? It's just the nature of it. So
Yeah.
what these guys have just done is just quantified what a top and a bottom is. So that's why it's a principle, and it can be put and layered with any other indicator, and you can use it in whichever way you want.
Yeah, no, that's great. So we're looking at a daily chart, Tiro. Can we just drill down maybe to an intraday chart of your, time period of your choosing?
Absolutely. Yeah. We can go to 60-minute. You
We
can
have that
see
60
what.
minute. Can we do this? Can we do this on a shorter time frame, maybe like 10 minutes or
Yeah, let's do it. Let's do 15 if you want.
yeah, 15 minutes is great.
Yeah. So it's telling you all of that. One other thing that this framework does, you see, the first thing we always teach our clients is define trend, define phase whenever you look at any time frame. So if you don't have this here, right? So if I remove all of that, when I show this to, let's say, 1,000 traders, some people will say that's a top, some people say no, that's not. Some people say that's a bottom, no, it's not. But by quantifying it, it removes that subjectivity. So when I want to define a trend on any time frame, I can just connect all these arrows together, right? And I can clearly say whether it's in a trend or in a compression. Over here, it's in a compression. And until it takes out this, it's not in a trend. It's further compressing here. Now it bursts out into a trend, right? So that's an uptrend over here. Then after that point, over here, as of now, where are we actually at? Now here, after it did its uptrend here, right? And then it came back down. Now it's looking to find a bottom. Now it's a downtrend, as you can see, we have quantified that as well. And now it's looking to make a top. And if it does make a top at the end of this 15 minutes, there's a high probability that it will carry on with its trend. But as we mentioned before, it can only carry on and there's move left if on the higher time frames, there's no resistance to it, right? And I quickly move back to the daily. I just want to get a whole picture of it, right? And I can see that this move here is quite a bit overextended. I just got to be wary that it's compressing here a little bit. It just broke out of that. Confirmation just came here. So let's just be wary of this, that on the daily, this is an uptrend phase one. According to this framework, yes, there's quite a large move left. I'm very confident the 80% runner. But just looking at the overall picture of the waves that is done from before, it might be compressing. Let me just want to quickly just take a look at the weekly, see if there's any other resistance over there as well or not. So far it's okay. I'm not sure why I'm getting that one there, but so far it's looking good. So that's how I would see to looking to see if it would be one of those 80% or 50% or 20% runners when I correlate all the time frames.
That's amazing. That's amazing. And I like when I'm looking at analysis, I like drilling down from a top level down to a bottom level where you're actually in the weeds and you're in the fight, let's say, right? You're actually executing. So that direction of knowing what the top is, happening at the top level, that can influence the behavior here today, even though you might see downward trend right now. We know the daily trend, we broke out of that, we confirmed that bottom, we broke out, and it just might be a pause, right, before we continue on.
Spot on, absolutely. Because you see the runner came in here, point of entry, moved quite a lot. Yep. There's a high chance that it's going to reverse, isn't it? Because how can it keep going in a straight line forever? That's the basis. Right. So the whole thing is yeah, it's very logical. The other two things quickly I would just summarize is if you look from the point of entry, you and I know that no runner is so healthy that he would just keep going up like that, right? Mm-hmm. Right. Some runners will be maybe 5% of them, never look back, never take a break, just go in full stamina. Right. I definitely can't do that. Maybe you can, Tom. I'm not sure.
I think Jim Cagnina can.
Oh yeah, yeah, maybe. He looks younger every time I see him. I don't know how
That's
he
right.
does it, but anyway. But most of them, if you can appreciate that, they will take a break, right? They will go back a little bit, come back up, go back. And that comes back to the first spot where we started this off, isn't it? Is it going to continue or going to reverse and make a turning point? And this is where people panic when it comes back against us. This is what we call, and some of your traders might be used to it, is we they quantify this as well. How much does it go against you before getting to your maximum point, right? So if let's say I had my confirmation bar here, how much does it go against? So it goes in your favor a little bit. After that, it comes back against you. Panic starts to set in, right? And then it starts to go up again. So this part, they measured. How much does it move against you before going to the top? So one of our traders in US, he called it, oh, the dance, right? How does it dance before it gets to the top? The volatility, if you want to put a technical term on it.
I like
So
that.
that we measured as well, right? So this is what we call maximum adverse excursion. Some of your more professional traders would have heard of it. The maximum adverse excursion that we measured was towards our objective of placing the initial stop loss. So according to this stats table where we measured over 1 year, just to give you an idea, 20 swings. So it moves against me 10 points, 9 of them, 45% of them. But if I want to place my stop loss in a place where I'll not get stopped 100% of the time, that will be 90 points away.
Mm.
Okay, that's based on a daily time frame. We can do this on any time frame at all. But in our statistical measuring, we don't want to do that so much because some of the losers can eat up a lot of the profit. So the number that we usually use is about 90 to 95%. So it's about 75 points we can put the initial stop loss on. The
That's
last stats that, yeah,
and that's different than max drawdown, right? Or
correct,
that's how much can it come back, even if you're in a profitable trade
correct.
going in your direction, how much can it come back before you hit your
Before
stop?
it before it goes,
Oh,
yeah,
it goes
before it
against
hits us, oh yeah, before it goes to your initial stop loss.
right.
And but if you place it at 70 points, 90% of the time you won't get stopped out. So it will do its dance, right? So it will scare you a little bit, right? But not get maybe to the 90 points because 90% of them when you get there, 90% get there. So if you place it over here at 75 points, it won't hit your stop. So then it will go up to your target.
It's how big you make the dance floor, Tiro.
So, I like it. I'm going to steal that one for the future.
There you go.
So that's the second one that they formulated. So that's on stats. The last one was just like in a run, you measure the time. How long does it take to get there, right? So we call it time two. So you can put a standard distance, keep the distance standard. In this case, I used the 80% number, which is about 30 points. And then over here, I can see that less than, they will get there within, all of them will get there within 5 days to 30 points, right? And then, so what I can do is I usually will use the 80% number. So after 3 days, if they don't get that, so they're dancing a bit too much, right? And then what I'll do is I'll start to trail my stop loss a bit tighter because I know that highly probably is going to become a loser.
Right.
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 So all these things you can derive all starting from the first point, what I spoke about. If you can quantify your tops and bottoms. And why do you quantify your tops and bottoms? Because of the main challenge we face, whether it's going to continue or it's going to reverse and make a turning point. I think those are the main things I wanted to cover today, really, just to give an idea of people. After you've done all of that, you can put this on any instrument, any time frame, right? After you've done all of that, you can, then the art is, how do you combine all of this to make a strategy construction, to build your edge? And this will make it more robust, to make it keep on continue to work, as people can start to appreciate how much logic and thinking has been put behind this. And you can overlay it with any kind of instrument because it's following the nature of market movement. It moves in cycles. So that's why with volume, it works beautifully well. And me and Gavin and Trade Guided team have done so many webinars together. And it works beautifully well every time. And even clients come back to us and say, you know what, Tiro, I took a glance at it. And Gavin, you know, it's just beautiful.
Awesome. Tiro, we're in overtime and I would go talking on this for another couple hours for sure. But where can people reach you if they want to continue the conversation with you? You know, reach out and see what mastering the markets is all about.
I would say, if they want to, usually people want to find out more about what I just spoke about. So we did like a video series. We spoke about this on the Society of Technical Analysis as well. So we put this together. It's called, again, 7 Steps to Consistent Trading Performance, where we'll go through all of these stats and everything in detail. So if one of you guys can put that link into the chat box. You
Yep.
guys can just put your name and email address and number if you want to, and then just get the videos, and then you can watch it step at a time. And it's about 10-15 minutes of video, but let me promise you, your whole way of thinking, and it will put more structure into whichever strategy you have, because it's all based on principles.
I love it. I love it, Tira. Thanks so much. And really appreciate your time sitting with us today. There's a lot of meat here on the plate. And like I said, I'd keep going, but I appreciate you coming in and your team helping us get this show on the live stream. So thanks again, and I'm sure we'll have you back on.
Yeah, definitely. I'm looking forward to it. I really enjoyed it. Tom, thanks so much for having us and giving us the opportunity to serve. And I look forward to doing many more to give you guys an idea and flavor of how this whole methodology will keep working, and how it works in real time.
Awesome. Thanks so much. I want to thank the viewers for coming as well. Please visit Tira's website, Master the Markets, and check it out. Really interesting stuff. We will finish the day with Jim Cagnina at bars closing. In the meantime, have a great trading day.